Good Fed day, everybody. Everyone doing okay? Hello, Hamid. Hi, Andre. How are you? Galaxy, Nigel, all my trading warrior brothers and sisters. The most critical day of the week, of the month, of the year, of the decade. Ping pong. How are you? Okay, so if it wasn't Fed day, I would say, gosh, you know, Euro is acting very orderly after the huge reversal on ECB, held 61.8. Now we're pulling back here, but it's Fed day. So everything can happen. So this is what I recommend. Buy and sell everything. Volatility spreads. Do nothing is what I'm doing until after the Fed. So, you know, some important areas to watch, definitely 61.8. You wouldn't want to see Euro take it out after the Fed. If you're looking for a recovery in the Euro, I think that would definitely put it in doubt. Gold's at such a critical area here. We've been holding this throwover line. I don't know how many hits we've had on it now. So if you're a gold bull, you don't want to see the market take out 1490-ish, 1488. If the gold does rally on Fed action, I think it could set up a sell, but way up here at around 1535. US dollar yen is really diverging, glaring divergence right here. So risk on is starting to show some cracks in the yen anyway on the 4-hour time frame. S&Ps looks even a little weaker than the yen. So, you know, like I said, everyone, the conventional, wait till the Fed and sell the S&Ps. That's what everyone's looking to do. And sometimes, and usually, the conventional thing to do doesn't work. So, you know, if you're a bear, you probably want to have a toe in the water before the Fed in case they disappoint. And then if they don't, and you still believe in the trade at new highs, because I still think there's a chance for new highs. The cleaner chart to me going into the Fed is NAS. See this green line here? Here's drive 1, here's drive 2, and drive 3 is going to be up around 8,100. Even if we, and that's quite a rally from here. You're talking 230 in NASDAQ. We'll see if the daily can blow out the divergence. I don't think it can, although the shorter time frames most likely would. We'll see. So the other story, you know, a lot of people are saying that yields have bottomed. Okay, that was something that we talked about, and Steve showed the Bund right at the top. So, you know, you had real nice divergence down here. This was part of the reason I was constructive US dollar yen. Right now, this looks just like a pullback, maybe 165 here on Fed action, some type of pullback. And when you look at yields now, you know, I was reading Jim Welsh's stuff, and there is a potential for a count that we get one more low. The 30-year made new historic lows. Okay, let me pull this up, and then I'm see this. This was the historic low right here, and we took it out, but then the 10-year did not. See, so maybe that's what has to happen. We have to clean out historic lows on the 10-year. You have an inside week here, but anyone who thinks they know how to position themselves in front of the Fed today, I want to give them all the money I have left. Okay, anyone out there? So our version in face of America's Got Talent, and I fell asleep. I don't know who won. Maybe there wasn't a result show, but America's Got Talent. Let's see here. Pretty talented, not an American. We're international. Not an American, this guy. Although he's my brother. Another one of my brothers. An American. The winner of Americans Got Talent has to be Joe Perry, if you've seen any of his appearances on Bloomberg. Paulie's very talented. America's Got Talent. And here's Miss Brexit, Amanda Sweeney, Andre Picasso Cardosa. Oh, look at this. We have a promo going. Look at that, guys. Everyone go to ForexAnalytix and check this out. You have to do it before I bring in America's Got Talent #1, Blake Morrow. Okay, till the 30th. So do you really need 12 more days to think about how much this is going to help you in the coming, let me stress, year? Give it a year. And if you're not part of our family, our community, this is my challenge. Okay, I'll be conservative. Take a 6-month plan and compare it to the last 6 months of your trading without being a subscriber. And my bet is you're going to do better. I'm not going to guarantee that you're going to get rich, but I will bet you, side bet, gentleman's bet, trading places bet, a Duke Brothers bet, I'll bet you $1 that you'll do better. Oh, you mean, oh, in Dancing with the Stars? Yeah, what was that guy's name? Sean Spicer? Yeah. Thank you, Zig. So here it is, guys. I think this can, I've heard from so many people what a game changer it's been to learn from Blake. Blake's in the room so many hours every day while he's trading for one of the, premier funds out there. You're seeing what he's doing. How can that not be an advantage? Anyway, if you can't, you could bring a horse to water. And if you're addicted to things being free, don't try and sell anything, because that's what's going to come back to you. No one's going to want to pay you either. So with that being said, I'm just talking about, what everyone believes in, all these universal laws, that if you're unwilling to pay, people are going to be unwilling to pay you. If you're willing and open to pay for a good service and you have a good service, people will pay you too. Okay, so if you have that paradigm, this is a good time to change it. And now I'm bringing Blake in. Blake, did you win last night on America's Got Talent?
I don't watch that.
Well, okay, our version, the ForexAnalytix version, you're the grand prize winner. You win $1 million. They won $1 million, Blake.
Yeah, that's huge. But
yeah,
I mean, I have zero talent, so let's just put it at that.
Well, not when it comes to what we talk about here every day and what you do in the room. You have a lot of talent. I need both of my hands to count the people that have said that you taught them how to trade, and they're now successful traders on their own. So,
well, thank you. I
mean it.
The thing about, well, first of all, I believe you're kind of overselling me a little bit. Let me.
I'm not, man. I'm going to debate that with you.
Okay.
Go ahead.
But let me just say, I'm not with like the premier fund. Okay. But let me tell you.
They're pretty elite. They have a great rep.
It is rather elite. Gelos Capital, or one of the partners there, actually found me several years ago, listening to my Morning Edge for a couple years, and I ended up the whole office apparently. Most of them were equity market traders, but there were a couple currency people. I want to say guys, but it wasn't all guys. A couple currency traders that listened to me, and so the whole office was listening to me all the time for a couple of years, and really liked what I did, and they recruited me over just as I knew the light was going out with the Wise Trade Group and Ally Financial at that time, several years back. I knew it was eventually going to go out, and so that was like my reason for exit. I'm like, now I'm just this little cog in this huge monster machine called Ally Financial. I just don't want to be there anymore. And I was
remember,
like,
I remember, I was in a transition from FX Street, and I reached out to you, and you said, Dale, they don't pay you much. Wise Trade.
Oh,
I was saying, is there room? Would they need a niche for me? And you kind of discouraged me.
Yeah, I mean, I'm like, it's not like it's not like a Goldman Sachs or anything like that. They just, they're just. I mean, I got paid a decent salary. I made most of my extra money, actually all my extra money trading, and for myself. But they gave me the flexibility to trade for myself, which was fine. But this group, came out and found me a few years ago. And so since then I've been, trading with them. And I started with the sister fund, if you will, and moved over to the currency arm a couple years back. But, most people here, especially if you use Twitter, FX Macro, I trade for him specifically and another person, and it's a small fund, and it's just, I don't know, it's less than 10 of us that trade, and we've all been handpicked by them, and it's been a wonderful opportunity. It is pretty exclusive. I feel very fortunate that I'm with them because they don't care that I do Forex analytics. They support what I do. They know that I've got commitments, for to do the webinar and to send out alerts. And I sit in the chat room and I tell people in the chat room, some of the ideas that we might be talking about in the office. And that's, that's a benefit for those people that are, trading there, that they can, if there's a strong consensus view, most of us, when we're trading for the fund, even though we're talking all day, you could probably hear them in the background.
That's an example of what I don't know if you were listening to my rant earlier about people that, are so used to not paying for anything that they want everything for free. And then when they go out and they try and sell something, people aren't going to want to pay them. And I believe you were discovered not just because you know how to trade, but because you were out there helping people. And because of that, you were discovered. Okay. So, that's that universal law, so you were giving, therefore you receive. If you're always taking, you're not going to receive.
Yeah, I think that's there's a lot to that in the universe and with in the stars. But
I'll take my tinfoil hat off now, Blake, and let you talk.
But right. But the fact of the matter is I'm surrounded by some of the brightest minds on the street, and it's interesting if you expect everybody to know what's going on at all times. That's not the case. A lot of us are sideswiped by these moves, and we're like, we're dumbfounded when things happen, just like everyone else out there. We scratch our heads and go, what? But when we all have a consensus view and we're talking about it, those are the types of ideas that I'll share with people in our private chat. I'll be like, hey, the guys at the office are pretty yada 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 about yada yada yada, and but now that doesn't do anything for us today. But going to today, I will say that all of us are just kind of sitting on our hands waiting for the Fed, and one of the overarching themes that we were talking about this morning is that the consensus of getting a hawkish cut was pretty much what the street was looking for. Now things are a little bit in question with the market seeing a little bit of short-term possible funding issues. The question is, will the Fed have to be a little easier And how's the street going to spin that? And do we get more of a cut, and it's more of a neutral cut instead of a hawkish cut? Like instead of cut 25, which is going to happen because the Fed's going to do what the market expects. They very rarely go outside of expectation. So we're gonna get 25 basis point cut, and probably expect at least another 25. But will they leave it more open-ended, or are they going to say, there's one more cut coming in October and then that's it? That's what the market was kind of looking for. So having more of a neutral, cut is quite possibly what we might get, and that could spur some dollar weakness. So myself, I'm actually, I'm looking at the euro, and you can see it on my screen. It's pretty well defined for me. I don't have to get too crazy here. I think this is our box pretty much. You can call it like 110.20 and 111. A move outside of 111, it's going to be bullish, and a move below 110.20 and it's bearish. And are you going to see a little bit of backfilling between now and then? Probably. I would assume that the euro trades back up to 110.60 and we sit there. The Aussie might trade up to 68.50. The cable's the cable, so I don't know what the cable's going to do. Dollar yen will probably hover around 108, and we're going to just kind of see what the Fed does here. I want to point out that technically, let me pull up a different chart just so I can. I'm going to pull up the euro on a different chart that's undrawn. Well, let me. It's got very little drawing on it. Let's go over to the weekly chart of the euro, and I don't want you guys to forget like the weekly view. Sometimes in situations like this, I got to think about, all right, what happened last week, and where are we right now? So when I look at like these candles that you see here on a weekly basis, these are, that was pretty much, what we're trying to do is we're trying to build some sort of bullish, bottom here. And even though that wasn't the strongest weekly candle out there this last week, it still suggests that we're moving higher. So by the end of the week, if candles play out the way that I see them here, we should end the week higher than where we're at right now. We should. That doesn't necessarily mean that I'm going to run out and buy the euro right now. It just technically I start to look at that and go, okay, well my bias is going to be more lean towards possibly playing a breakout here. If we break 110.90, 111, I'll be more apt to be aggressively long versus us breaking 110 and I'd be aggressively short. I'd be more comfortable actually being on the long side based on what I've seen on the weekly charts. And so that's where my bias lies. So I'm letting you guys know right now, I'm leaning towards buying the euro, not saying that I'm buying the euro, not saying that, I bought the euro before the FOMC and I'm just going to, close my eyes and hope for the best. No, what I'd rather do today is I'd rather play the euro to the long side. That's my game. That's my bias. That's how I want to tailor my ideas today. Doesn't mean that that's, I could be completely wrong. We get you could
change your mind too.
Yeah, we get a hawkish cut,
yeah.
and we break through 110, and I'm like, you know what? They're pretty damn hawkish, and then I decide to go short and look for a break below 109.
So the people in the chat room are going to know what you're going to do after the Fed, where people at face are not going to know.
Correct. Yeah, I'll be in the chat room,
yeah.
Of course, as I always am, through these events. So, I'll be sitting there, just kind of waiting to pounce. And but like I said, as of right now, my bias is I want to play the euro to the long side. A couple of the other things I want to point out really fast. Let's since I was looking at some of the longer term stuff, let's go over to the Aussie. I want to show you some things here with the Aussie dollar. Let's go over to the weekly charts again. So the Aussie, just so you guys see, this is a weekly chart. Now, one of the things that I'm kind of looking at here is the fact that we're back you know, back above this breakdown point, or right down at the breakdown point, you know, we're pretty much there. And, you know, I've got to imagine, and I know I've said this probably weeks ago. I'm 90% sure I've said this, and I'm going to say it again. If you're short Aussie dollars for whatever reason, China and the U.S. trade war, you know, the slowdown globally, you know, the blah blah blah, whatever, you know, if you've been leaning on the Aussie for a long time, the Aussie has not really paid you that much to the downside. It has not. And especially if you think about like where the Aussie's at versus where, you know, it's just kind of been a grind. You know, I'm as we get towards, you know, as we get towards, you know, and it, there was a, a Trump said that we shouldn't expect a trade deal with China until, you know, maybe the election night or a day after the election is what he said yesterday. So kind of dim the hopes of any type of trade deal getting done anytime soon. However, doesn't mean that progress can't be made. And remember, we have China U.S. Trade delegations that are meeting in October. So, you know, I guess what I'm trying to point out here is the Aussie just really hasn't participated to the downside as much as I would have thought. You know, personally, you know, and I've been really staying away from the Aussie. I haven't traded it much, just because it's been very frustrating. You know, but I'm looking at it on a weekly basis. I'm starting to think, man, it's just not really producing a lot of downside. And if you're short, you're probably thinking, yeah, I don't know if I really want to be short too much longer. And I guess I'm trying to point that out because, you know, if we for some reason get a break higher in the Aussie today, you know, if the Aussie starts to, you know, take out like, you know, these previous highs here, I don't know if I'd want to be short, and we might start to see a squeeze in the Aussie, you know, if the dollar does weaken. And then, you know, the Kiwi is a very similar situation. If you look at the New Zealand dollar, and I've been looking at the New Zealand as well, going, man, this thing looks so weak. You know, we've got to be, you know, we've got to trade back down towards this like 55-cent level. But, you know, the thing is the Kiwi hasn't really been breaking down. I mean,
Hey,
we
Blake.
are, but we're not. Can I finish my thoughts really quick, Steve?
Absolutely.
So
Just a comment on the weekly when you're done.
So, you know, I look at the Kiwi and I'm thinking, you know, very similar type of situation. We're just really not breaking down. I mean, we're breaking down. I guess the Kiwi's been a little bit more weak than the Aussie, and you've seen it in the Aussie New Zealand. But, you know, if we start breaching some of these resistance levels, there's a likelihood that we're going to start squeezing here. Whether you're talking about the euro, whether you're talking about the Aussie, and we're all, you know, you take the euro, we're in a descending wedge. You know, there's a lot of, you know, grinding lower, or you could say grinding higher in the dollar. But if we get a, you know, if we end up getting a cut and it's more neutral, or maybe even a little dovish, we could see the dollar really, you know, really start to reverse. And it's not just the euro that I'm looking at. I'm starting to look at the Kiwi, and I'm looking at the Aussie, thinking, you know, we might wait, hold on really quick. Sorry, I just saw a bunch of headlines come across, but it's nothing significant. Anyway, just, you know, some food for thought. Now, one last thing, and then I'll let Steve say something about the weekly charts here. You know, one of the currency pairs that and I know I've told you guys this is one that I'm really kind of focused on today, is the US dollar Norwegian krona. Crude oil aside, and crude, by the way, is still, it's weakening as, you know, Saudi oil outputs, you know, getting ramped back up. But we still have this head and shoulder pattern. We have a bear flag pattern, and we have the Norges Central Bank tomorrow. And it's going to be in the middle of the night while I'm sleeping, but it's like 1 a.m. Eastern, I think. I have to go back and recheck that number. You know, Stelios might actually have a better idea when, because he's following the NOK quite exclusively. But if we start to see dollar weakness, you know, I look at this bear flag pattern, And, you know, Norway is one of the central banks that is actually slated to raise rates. Now, I can't imagine them having a hawkish hike tomorrow. It's probably going to be more of a dovish hike. However, we can't rule out the fact that they are raising rates. And if they continue to raise, if they raise rates and the Fed actually is a little bit more dovish, the US dollar and Norwegian krona could actually have a pretty severe breakdown. We could see it break below 890 and, you know, trade back down towards 880. You know, if you look at the flag, it could actually play out pretty decently. So that's one that, you know, if I play the euro to the long side, I'm actually going to be, you know, looking at shorting the US dollar and Norwegian krona here. All right, so Steve, you wanted to talk a little bit about the weekly charts. I was discussing.
Oh, all of them. I just want to say that all of them display very noticeable RSI divergences, right?
Yeah, we are starting to see. I mean, we do have pretty significant divergences. I try not to read into divergence too much unless we see a reversal, because a divergence in relative strength is just resetting of relative strength. So like, let me explain to you what I mean by that. If you're looking at the Aussie and you see relative strength divergent, which it is, okay. If we get a move lower in the Aussie, let's say it breaks lower, all this RSI did is just reset itself to break down again. That's how we get resumption of trend. So the divergences are only key to me once we see a reason for reversal. So in other words, if I, and this is going back to what I was saying a little bit
That's
earlier.
a great point, because you know how important that is in my work, and I could attest to what you're saying is sometimes divergence means too much to me.
Yeah, well,
because I've had to, you know, you've had divergences in the S&Ps for 10 years.
Yeah. So, all that does is exactly all it does is allows for these divergences in the S&P to, you know, reset.
How many divergent? I mean, we haven't, you know, we've been diverging on the. You're showing the weekly on the S&P. Look at where the last confirmed high was, Blake. Right there.
Yeah, right.
Yeah,
here.
right there. Okay, so you've had divergences at every high, but you know, besides maybe having a break or two, you went broke trading these divergences.
Yeah. Couldn't we do this again?
Yeah.
I mean, couldn't we? I mean,
I'm changing my whole style. I just had a breakthrough.
Although having to do with that S&P high on the RSI, I need to remind you that we will probably be diverging in eternity, having to do with it, because if I remember
and stocks may go up for eternity too, right?
If I remember well, that high on the weekly when we had that mania at the beginning of 2018 was an all-time high record.
In RSI.
Yeah, in RSI, yes.
You got great reviews on the interview yesterday. A lot of people are asking you to do every interview now.
So really quick, we got some CPI out of Canada. We got building permits out of the US. I'm not expecting a lot of volatility here, but I'll stick around with you guys for just a couple of minutes so I don't just flop it over to Steve. You know, we'll keep an eye on data flash. Now, remember, data flash, this is included with your ForexAnalytix subscription. If you look at, you know, this is Bloomberg right here. This is Bloomberg. Okay. And you watch the difference between when Bloomberg releases and the data flash releases. It's, you know, a lot of times it's like on par, and sometimes it's a little slower, but you know, it depends on the release. It's pretty good. So we're just going to hold it on the Canadian Canadian 15-minute chart here, just so you can see, because it's mostly the CPI that if I was trading the CAD, I'd be more concerned with what's happening versus I don't really care so much about the housing starts that are coming out. I don't think it's going to be much of a, you know, housing is kind of a non-issue right now because rates are so low. Housing market is staying elevated, and we're not seeing a lot of movement there. But CPI is going to be a big deal for Canada. So with the Canadian CPI, you know, if we see a little, you know, uptick in that Canadian data, you might see that US dollar Canadian sell off a little bit more. So we'll see here. Here we go. Data is being released. You know, there's the and you can see the housing starts came in a little less than expected, or a little weaker, but a little stronger. What did I want to say here? The Canadian data came in at the same time as Bloomberg. So I see a little strength in the dollar Canadian here. Still pretty blah. Not a whole lot of movement. All right. I mean, the revisions were higher with the housing start, so it's helping the dollar just a little bit, but it's not really moving the market up much. Okay, so Stelio, Steve.
Hey, Blake.
Good morning.
Good morning, guys.
Good morning, mate.
So, you know, we're waiting for the FOMC. I just want to say, you know, if you guys have not taken our seasonal offer yet for ForexAnalytix, this is your time to do so. It is the best price you're going to see at, you know, up into this point in this year. And it's, you know, it's pretty much on par with some of the best prices that we do throughout the course of the year. So if you want to be involved with ForexAnalytix and use our platform and be involved with our community, this is the time to do it. Don't wait. And I'm going to pass it over to you guys, and I will see the rest of you in the chat room, in the ForexAnalytix chat room today.
By the
Good
way,
luck. Good luck today, Blake.
Thanks, and good luck to you guys.
Ben Blake has been a listener since the morning edge and the London close, and he points out that you have a great singing voice.
He does. He wants to hear the Smurf song. He's trying to get the Smurf song,
He does.
but everything is awesome. I'm just not going to do it today. I'm not feeling it.
Greek priest, or the Greek priest singing.
Yes.
We'll have to do karaoke together one night, Blake.
No, I have to. If I had like 4 or 5 shots of tequila, I might do it. Okay,
All right, buddy.
All right, and I've seen you karaoke. There's no way. I'm more of a. I'll just sit there and cheer you on. All right, guys, have a great one.
All right, make a killing
Bye-bye,
today.
Blake.
Hello, Steve.
Coach,
Yeah.
Coach, you know who is good competition for karaoke for you, huh?
Who?
Joe.
Joe's a singer?
Yeah.
Oh, cool.
Yeah.
That'd be fun.
Yeah.
What kind of stuff does he do? You've heard him sing?
Joe is writing on Skype. I knew you were going to say that.
What do you sing, Joe?
Joe, come on.
A little
Don't be shy.
Springsteen? Who do you
Springsteen,
cover? Who do you cover, bro? And Steve, listen to this. Jason Wright said, yesterday's interview with Privateer and Steve's views was awesome. So
yeah, I mean, you know,
you got my job, man.
I would enjoy on occasion, but I know that many of our viewers, you know, are not into that. But I would enjoy on occasion to have some kind of a fun
you're doing
discussion.
today's interview, bro. Crypto Cal, your favorite subject.
You don't want me to do that.
Come on, you're doing a crypto interview today.
But in all honesty, on occasion, I would be more than happy to do some, a webinar purely for people that are interested in discussing macro fundamentals, how an economy functions, because unfortunately, I've seen that in action. When it comes to the general mechanics of the economy, a lot of people are, reacting with their hearts instead of, going with, the real data. I'm a big believer in Austrian economics, and I've seen it in action that it's the only economic train of thought that really depicts properly what makes an economy tick and what not. We like it or not. I mean, for some people it looks like going back to the debate we had yesterday about having a minimum wage or not having a minimum wage. I saw the reactions from people in the chat. A lot of them were writing things like, I was once on a minimum wage and it sucks, which, is not an economic argument, as you understand, right? But, what works and what doesn't work in an economy is more or less, something that has been observed over years. So at some point I would want us, to have, discussions like that. but not during phase, because I understand that many people come here to see what's happening with the chart. So it would be good if we organize something like that, so we know that people that participate are people that are actually interested 100% in that. But yeah, Privateer, I like the guy. I mean, he has a nice view of the economy in general, and I think it was a very interesting interview.
And someone's saying that it'd be great if Stel did a webinar on his macro stuff.
Yeah, we can do that. The only thing is the things don't change that much from one day to another. So
you do one every 5 years.
Yeah. No. Right.
Okay, Celia, by the way,
Yes.
During your part, we have Ben asking what is the significance of the New York Fed repo operations, 53 billion and 73 billion today. So I think we can start from there, because I do realize that there are some people that don't know. They've been reading all these headlines since a couple of days ago, and they're not really sure how the repo market works and what exactly, what kind of signals it sends. So since you are the person to speak about it, you were working in a big bank in doing rates, etc. Why don't you start by that so people understand?
Yeah. Okay. I mean, we said this yesterday, but it's worth repeating. The repo market is a way for banks to finance themselves. So what they do is they bring out some of their assets, treasuries or whatever it is. They loan them out on overnight basis. Investors buy that, and then the next day the banks buy them back plus some interest for the overnight loan. That interest is usually very close to the Fed funds effective rate, and the amount that usually typically is needed for overnight repos is very small. It's like 2, 3, 4 billion or something like that. It's not
it's in essence for the banks to balance their books overnight,
to fund themselves,
right?
Yes, to fund whatever funding they have to cover that. And what's been happening over the last few days is that this repo rate is going very high, and so there are some reasons for that. There was a corporate tax day where banks have to, where people and institutions and companies, because they have to pay the taxes, they take out liquidity from the system. So then the banks have to finance that. And there was a big, there's quite a few bonds were maturing, I think, on the same day. So there was a need for a lot of cash. And that's one of the reasons why that happened. Now, the thing is, what does it mean? Should we care about it? Well, the answer is relatively simple. This thing should slowly go back to normality. If it doesn't, then there's a more deeper.
Yeah, there's an underlying cause for that. Yeah.
Exactly. And the other thing you have to look at, and I said this in the chat, and we have to look at FRAU spreads, which is the difference between Fed funds and the difference between where banks lend to each other. And this is what the repo rate going higher was one of the first things that happened in the 2008 crisis. And then the FRAU spreads widened massively. So these all together, all these things, they show you that there is a need for cash out there. Why is there a need for cash? It's very worrying if banks need to get cash and they can't get it. So my reaction to this is something definitely we need to look at. But theoretically, this should go back to normality, within the next few days. So if this continues, then I think there's a
very, very big red alert signal.
Yes. And the Fed, talking about the Fed, and they have obviously the interest rate decision today. What could be going through their minds? What could make the Fed be hawkish? That's my question, because the market's currently pricing a cut, not a whole cut. Based on my calculations, it's something like 80%. Based on the CME website, which is wrong, it's showing 55%. It's much more than that. 80% chance. What could make the Fed be hawkish, either not cut or do a hawkish cut? Well, I can't think of anything except there are some lagging indicators which are still doing well, like unemployment and consumer confidence. We know, you said this yesterday, Steve. Consumer confidence peaks right before a recession. So that's
sometimes it peaks even when the data, after being revised, showed us that we were already in a recession, because people hadn't yet realized, because I remind you that very frequently we go back, we revise the data, and we realize that the recession had begun when the data that we were getting were still telling us, theoretically speaking, that we are not in a recession. That happened, for example, in the financial crisis of 2008.
Yeah. So when I think about what the Fed's going to do today, I think they're going to cut, and I think they're going to be dovish, because if you look at everything else, you look at PMIs, you look at, You
mentioned, by the way, the unemployment rate, and this is not tinfoil shit, and I'm going to go back to the charts immediately. I see your questions, guys, don't worry. A lot of people don't realize, and this is not something like, it's not a theory or whatever, a lot of people don't realize, people say, oh, we have the lowest unemployment we've had since I don't even know when. No, we don't. No, the US doesn't, The US doesn't. The calculation of unemployment has been changed along with the CPI since the 90s so much that the unemployment rates before and after are absolutely non-comparable. Just to give you an idea, a few decades back, if you had a part-time work job and you were looking for a full-time job, you were considered unemployed in the main index. Because there are, indexes like U6 and etc. that, take different categories. But in the main one, in the nominal number that we get as, unemployment, you were considered unemployed. Why? Because you had a part-time job, but that's not what you wanted to have. Nowadays, not only if you have a part-time job, you're considered employed, but for every part-time job you have, it's like you have one extra job in the economy. So for example, a person that has 3 part-time jobs, which nobody wants to have 3 part-time jobs, right? There's no single person on the planet that wants to have 3 part-time jobs. If you have 3 part-time jobs, first of all, it means that you really, really need the money. Second of all, it means that if somebody offered you good employment, full employment, that's what you would go for, right?
I'm waiting.
So if you're a person that has 3 part-time jobs, that counts in today's unemployment rate like 3 jobs in the economy, which, as you understand, is so far away from what we should be measuring that it's not even fun. So, we can't even compare today's calculations in the CPI or in employment with what we used to have, because every time the governments, and that doesn't only go for the US, go and change the way they calculate things, guess what the purpose is to window dress the economic data. They've done the same with the CPI. For example, you're buying now an iPhone for $1,000, and the CPI might even consider that iPhones have got cheaper because there is what we call hedonic adjustments. So somebody arbitrarily goes there and says, oh, the iPhone has that much of a better camera than it used to have, so we have to adjust its price down by, let's say, 40% because that's how much better the product has become. But the question is, when you were buying iPhones, let's say 5 years ago, with when you buy them today, yeah, they have a little bit of a better camera, they have a little bit of a better processor. But question, wasn't still a mobile phone that you were buying, paying money? Wasn't still like, let's say, the best or one of the best mobile phones that you were buying? Why would we adjust down the price today just because technology improves? You're still buying a mobile phone 5 years ago to do the work a mobile phone does, and the same thing you do today. But
Steve, also, you can't eat iPhones and you can't live in one.
Obviously, yeah, obviously.
And so, do they count? You know how rents have gone in the U.S. They've doubled in the last 10 years.
Not to speak about insurance premiums, right?
Oh yes, yes, medical care.
I remember a few years ago, like 5 years ago, I was reading how much, what percentage of an expenditure for a family was insurance taking in the CPI calculation of the government, that it was something ridiculous.
Low.
Not low, extremely low, something that nobody pays. It was showing like a ridiculous number, like 1% of the family expenditure is insurance. Really? Really? Seriously?
Yeah. In California, family? People spend 60% of their disposable income on housing.
Yeah, that's why I'm telling you, I'm not telling you that you have to take CPI and employment with a pinch of salt, because that would be an underestimation. If you really go and check the numbers and realize how they're calculating stuff today, you realize why, theoretically speaking, the US economy, for example, there is not one person living in the US that believes that the US has the best economy it ever had. I mean, ask any friend of yours that is your age, Dale, do you have a single friend of yours that believes that the best economy they've seen is today or 5 years ago? I'm not trying to, you know, to make a point about Trump. Let's say about Obama. Does anybody really believe that's the best economy the US ever had, even in a lifespan? No chance in a billion. Why does unemployment though show that it is the best economy? Because unemployment, as I said, the way they've calculated it has changed dramatically. So it shows something totally different than the previous calculation of unemployment was showing. Reagan time, I think. Yeah, I would agree with you, Neil. I mean, that was the best recent era having to do with economies, when UK had Margaret Thatcher and the US had Ronald Reagan. Yeah, no question about it. Yeah, no question about it. Anyhow, let's cover the questions now. You know, we've had a little bit more time to talk about that stuff. There's a question about MACD. I had that question the other day as well. The MACD indicator does what the RSI indicator does. I mean, it shows momentum. It is a little bit different, more smoothened. Just to give you an idea, the MACD indicator has two lines, right? I'm not going to pull one up now, but it has two lines. One of them is called the MACD line, and it is the difference of two EMAs, exponential moving averages. And then there is the signal line. I think it's the 12 and the 26 moving average, if I remember right. I mean, the difference of the 12 and the 26 EMA. And then there is a signal line, which is also extra smoothened, because the signal line is an exponential moving average of the MACD itself. I think a short one, like an 8 EMA, 9 EMA, or something like that. So it's extra smoothened in comparison to the RSI, but they both do the same thing. I mean, if you learn how to read the MACD and if you learn how to read an RSI, in essence, what you get from one, you get from the other. And the same applies to all the other momentum indicators out there. So in my opinion, there is no real benefit in trying to master, if you want to do it, but to master, let's say, a MACD, and not an RSI, or, you know, a CCI or whatever. I mean, there are several momentum indicators. As I've said, the vast majority of the experienced traders, if you notice, they use the RSI because the vast majority of the people use the RSI. And, you know, an extra element of technical analysis is to know what other people see on a chart. So since they do more or less the same thing, but you know that more people are using the RSI, you know, it's a good idea to use the RSI, in my opinion. By the way, we have Jane here mentioning, Neil mentioning that it is the 9 EMA. Yeah, I told you, I didn't remember if it was an 8 or a 9. And the difference of the 12 and 26 are also drawn in a histogram. Yeah, behind the MACD, you also have a histogram, indeed, which shows, in essence, the distance between the two. Yes, so it also has the histogram, although the histogram is not so much part of the signal. The signal, theoretically speaking, is when the signal line crosses the MACD line. Okay, that's theoretically a signal. If you want to build like an algo that uses, you know, among other things, the MACD, that's what the signal, theoretically speaking, is. Now, going to the charts, and let's see what questions we had. Let's see. Okay, USDCAD, pound Kiwi. Sure, we can have Euro pound. Ciao, Gregorio, by the way. Okay, so let's start by the Euro pound, because the Euro pound is indeed at an interesting juncture. I was looking at it earlier today. So let's start by the Euro pound, and I'll cover the rest as well. Euro pound is testing support, as you see here. So as you see, we're still depreciating within this descending channel. But we are in, testing this horizontal support area at 88.50. If you remember when we started this corrective move lower, I said to Dale, my target is 88.50. Actually, I said my target is 89.50, but I wouldn't rule out a move towards 88.50. And as you see, the 200 daily moving average is also here. So we're on a confluence of supports at 88.50.
Remember?
And yeah, I know you do. You have an elephant's memory. So I want to see what's going to happen from here, because this is quite an interesting juncture. Now, if we move lower, then we have the 61.8 at 87.86. But I have to say that I like this area of support. So if I see some type of a reaction, and by reaction, what do I mean? I want to see like a big candle higher, right? I don't want to see a little. Yeah, I don't want to see a little grind. I mean, I want to see some type of a move higher that shows that there is buying momentum coming.
Something with chutzpah.
Oh yeah.
Chutzpah.
So if we see something like that, and especially then a break above 89.50 once again, then I will have a decent amount of evidence to say that probably this was a corrective move lower that is over and done. But until that happens, I think that, if you were to be buying here, just because we are on a confluence of supports without any evidence that we're reversing, you clearly understand that you're jumping the gun. So, make sure that, you have an appropriate risk reward, and, you go in the trade by writing out your position as a loss in advance. That's my point of view here. So that's what I think about the Euro pound. Now, having to do with the USDCAD, I think it's, one of the pairs that it's not that easy to read where we currently are. Keep in mind, yesterday, as you see, we spiked higher. We covered that yesterday again, and they said that, listen, 133 remains an area of resistance. As you see, the 200 daily moving average is there, but it's also horizontal support resistance area. Yesterday, we spiked there. We tested that area. We failed. We actually closed almost unchanged, despite having traded higher earlier. As long as we stay below 133, it is quite likely that we're going to make another attempt to move lower and test this long-term channel support. Now, obviously, what's going to happen is going to happen today, because, with whatever kind of volatility we get following the Fed, probably, when we look at the charts tomorrow, most likely the USD pairs are going to be at totally different places. Okay. So I think today is going to be quite important, because it's going to prove if yesterday's test of 133 was, the end of that rebound, in which case we should be looking lower, or, we're headed higher. So today's close is going to be quite important. Keep in mind that this long-term channel support that passes currently from 131 is a super important technical formation. So if for any reason we close below 131, that's a very, very bearish signal. So, if you like USDCAD to the downside, a close below 131, I think, is what you're looking for. In which case, I think we might see a lot more downside than most people expect. As I was explaining yesterday, though, and I'm not going to go over it once again, but not for any other reason, but Blake also covered it a little bit earlier. I think that USD NOK, if you're looking for downside, looks even more appealing, because it's yesterday, actually, USD NOK did test the neckline of a head and shoulders formation. You can see it here, shoulder, head, shoulder, and the neckline was roughly there. We tested it again. We closed there today. We've been rebounding, but now we're giving back, the earlier gains. So I think that a daily close below 890 opens up a lot more downside, and in essence, you can like fib extend and find out what the target of this head and shoulders formation would be. Actually, we can do that together if you want. It's not it's a day that a lot of things are happening. So that would more or less imply a move down towards 866. Okay. So I think that USD NOK is one to watch. If we do get US dollar weakness, USD NOK looks one of the better places to be positioned. Now, we had a question also about the pound kiwi. So let's go ahead. Keep in mind, yesterday I wrote early in the chat room, when we were exactly at 124 yesterday, I wrote that, you know, this is an excellent buying opportunity for the pound, but I do understand that it is, you know, very hard for somebody to commit ahead of the Fed to be buying it here. The reason is because 123.70 was resistance and it should be support from that point on. So being just like 30 pips away from, you know, key support was obviously a very appealing buying opportunity, and you know that ended up actually working out quite nicely. If anybody took that, personally I didn't do anything, and I didn't intend to do anything ahead of the Fed. If I had the position, I would be holding it, but I didn't have it in advance, so I didn't want to buy it one day, you know, before the Fed. But regardless, it proved to be, you know, a nice opportunity, because if somebody took the trade, you know, you now have the luxury of being able to manage it, you know, trail your stop loss to break even. And if you're lucky and you actually get, let's say, a dollar weakness post-Fed reaction, then you'll find yourself a lot more in the money. Now, let's go to the pound kiwi, because the question was about the pound kiwi, but I first wanted to show what's happening here with pound against the dollar. So, pound kiwi, still appreciating within this ascending channel. Keep in mind that all this takes place within a larger ascending channel. You can see it here. So in essence, we're currently in the middle of a long-term formation while appreciating in another channel, right? Another technical formation. So, you know, just by looking at the short-term channel, we've started seeing some elements of RSI divergence. We've started seeing momentum, you know, wane. We're approaching the trend line resistance. So I would have to say that it doesn't look smart to me for you in the short term to be buying up here, right? So, you know, if you want to be buying, at the very least, I would hope for a retracement to 193.50, 193.70, previous resistance here. So if you want to be buying, a retest of that will give you some risk reward to, you know, to do that. In that case, if that works out, I would be looking for a retest of that high at 2. Now, on the other hand, if we end up breaking down from this ascending channel, then I would be looking for another retest of the larger formations channel support, which currently passes from 186.70 or whatever it is. Okay, so bottom line, I won't be doing anything here. You want to be buying, try to buy 193.50. Otherwise, sell the breakdown from this channel if that actually happens. Okay. RSI is a lagging indicator. Yes, it is, but keep in mind that there is absolutely, by the mathematical nature, there is absolutely no momentum indicator that is not a lagging indicator, because momentum indicators, what they do is read price action of what has already happened. So there is absolutely no momentum indicator that isn't a lagging indicator. So in that sense, there is no better or worse. Some of them actually are worse. So for example, when I said before that the MACD is double smoothened, that makes it even more of a lagging indicator in comparison to other momentum indicators, okay? But all of them are lagging indicators. Where is the neckline of USD NOK? As I said, it was roughly 890, 892, something like that. What about copper? Yeah, what about copper? Let's have a look at it. Copper, there it is. So, if you like copper, now this is the bullish interpretation of copper here. The bullish interpretation would be that this last move lower was all a descending wedge. You can see it here. So if you really like copper, this is a really nice area to be trying to buy it. Because if that's the case, if what we had here is a descending wedge, then we had a break higher, and we're now retesting the trend line resistance as support. Now, if that fails, 256 is another horizontal support resistance area. But I have to tell you that copper has really been moving slowly. So you need to be quite patient with it. Okay. So, that's the case with copper. If you like it, probably that's not a bad area for you to attempt being long here. My pleasure. Dave of Aspen was showing something in his Bloomberg on Monday. The percentiles of currency pairs in his VCA volatility correlation analysis. Is there a way to look up these values somewhere? I have no idea. I mean, I can tell you one thing as a fact. You can construct infinite number of indicators, okay, infinite number. And some of them, yeah, do give you some insight. There's no question about it. But I'll tell you something. I think one of the first phases that amateur traders pass from is that initially they are very, very anxious of doing as much work as they can to become better in what they want to be doing, which is trading. So they begin by very enthusiastically reading about all indicators and from chart indicators to like chart patterns and candlestick formations, and some of them might go deeper like Elliott waves or whatever, which all of them are useful things to do. I'm not advocating against it. I actually think that it's a good idea if you have an encyclopedic knowledge of everything that has to do with technical trading and how an economy works and macro indicators, etc. That's good for you. But I can also tell you something, and Dale is going to testify to that as well with his much larger experience. I know very few successful traders that end up using tons and tons of indicators and are looking at tons of stuff, because something. At the end of the day, when you start building experience, the vast majority of experienced traders, you can show them a chart without anything on it. They can more or less tell you where the RSI is, if it would be diverging. They can tell you if there is any formation worth noting without even having drawn it on a chart yet. So basically what I'm trying to tell you is that all those are useful things, but what matters the most is that you get enough screen time and enough of an observation so you can read to learn what price tells you. Because any indicator on this world, in essence, tries to interpret in different or various ways one thing and one thing only: price movement, nothing else.
I agree with all that, Steve. It's interview time. And, people have to be patient, because I say this, you can't learn experience. It only happens with the passing of time and living through stuff. And that time in our trade is screen time. So,
yeah. And it's not by accident that people that have the patience and go through the first 1-2 years, they stick around. And it's not by accident that the vast majority of the people that fail too early.
How about the first 2 decades? All right. Anyway, I'm only talking about, everything's about me. Okay. Anyway, it's interview time with Crypto Cal.
Okay.
Enjoy. Thank you, buddy. I'm sure you're going to want to interject on this one too, buddy.
So, unfortunately, yesterday I enjoyed, so I overstayed my welcome. But
I'm just kidding.
Today
I enjoy it. It gives me a break.
I know. But today I really have to jump on a meeting, so I'm not going to stay at all.
All right. Well, good luck today, Steve.
Thank you. I'm just going to stay enough to see that everything is working fine with sound.
Thank you, buddy.
And I'm off. Thank you.
Okay, so Callum, I'm promoting you to panelist, and then I'm going to unmute you and look forward to hearing you. And
Hello, Dale. Can you hear me?
can hear you, Cal. How are you?
I'm well, Dale. How are you?
I'm fine. Thank you so much for joining us here on Phase. I've been looking forward to meeting you and hearing about your journey. If you hover your mouse around the drop-down menu, you'll see a green box that says share. And then you'll be able to share your screen, and a picture speaks 1,000 words, even though I try and top that with 1,000,000 words. But
Okay, well, I think I've got it, if you bear with me.
you got it.
Can you see that?
Got it.
Superb. Well, yeah, thank you very much for having me on, Dale. I'm a big fan.
Oh, well, the 8x10 autograph picture is in the mail, buddy.
Huh.
All right.
Yeah, sorry.
That's okay. So what I like to do, Cal, is hear about how people ended up in, this road less traveled, becoming a trader. Can you tell us a little bit about, what you were doing before you got involved in trading? And I see cable up here right now, and who introduced you to it. Tell us a little bit about your journey into trading.
Yeah, of course. Well, the bottom line is I'm a humble retail trader, nothing more, nothing less. I was actually an employment law consultant. So I studied business management with economics at university.
Yes.
And then went into human resources, specializing in employment law. And so I was living in Manchester at the time. And two of my friends introduced me to trading when in the great equity bull market that we which we could still be in, the one that's like 2009, who knows when that's
okay. All right.
But yeah, and so a few friends introduced me to trading, clicking the buy and sell button, and I was earning more money part-time trading than I was in employment law. So it was a big decision to leave. I've been trading full-time for nearly 2 years now. So it was a big decision to leave, but I think it was a good one. And here I am, humble retail trader from Liverpool.
Oh gosh, hometown of you-know-who. So anyway, 2 years. So, I've done well over 1,000 of these, Cal, over the last 4 or 5 years. And I ask people all the time, how long did it take you to make breakthroughs so that you became more consistent to be able to make a living off the markets? And you're into it 2 years now. How are things going for you?
Well, I've been into it for more than 2 years.
Oh, okay.
It's going on 3 years.
Oh, is it just full-time 2 years now?
Yeah, just full-time 2 years.
Okay.
I mean, yeah, because obviously the Bitcoin bull run was very kind to me.
Okay.
I'm a massive Bitcoin bull. I think it's great.
Okay.
And the equity market was phenomenal 2016, well, end of 2016, 2017. And I don't know, it's hard to explain. 2018 was a big learning curve for me because obviously January 2018, whenever the jobs report scared investors and we saw the 10-11% correction in US equities, that was a big lesson for me. I lost a lot of money that week, I'm not going to lie. And then the correction in Q4, when everything shit nearly hit the fan, pardon my French, Dale, and the plunge protection team had to come in.
Right.
But no, it's been a big learning curve. I think 2017 was definitely my best year, but 2018 taught me how to actually trade instead of just riding trends. So. Okay,
so you also learned a little bit about risk management.
Oh yeah, I had to learn that the hard way, believe you me, Dale.
Everyone does. A friend of mine would say this to me, Cal. Dale, how many times do you have to get hit in the head with a ball peen hammer to know that it hurts? Yeah. So me, I don't know, 100 times maybe I have a dent in my forehead. So 2 years into it, and you caught some great waves. You know what? People have been in this business for 20, 30, 40 years and can't say that they've caught a huge move. like you did in Bitcoin or perhaps in the bull market before the sell-off in 2018, because I've always said some of these huge moves like Bitcoin that we had, you either had to be naive or greedy, because after you've been around for a while, you become skeptical of a lot of things, and it's much harder to have a great hold. A great trade is easier, but a great hold is the toughest thing for all traders. So since you've been through giving back capital, are you able to still ride trends, or has that become more difficult because of that experience you had in early 2018?
Yeah, I couldn't have worded it better, because I bought most of my Bitcoin and other cryptocurrencies very cheap. I rode the entire thing, and I didn't sell when I should have done. You know, that's complete naivety on my account. And it is more difficult to ride trends because you're much more skeptical, you know, which in the end will be good for longevity, risk management always. But I completely agree. It's much harder to ride trends when you know what risk management is.
Yes. And also because of that, I leave, a lot of pips on the table. But you know what, Bernard Baruch says, you never go broke taking profits, but you never get rich taking them too soon. So you brought up cable. You want to talk about it, since you are a Brit and we're facing within about a month the Brexit scenario. So tell us what you're seeing. It looks like you trade pretty naked here, buddy. All I see is volume and a rectangle. So tell us what you're seeing.
Yeah, of course. Well, I'm heavily into politics and Brexit. I proudly voted to leave.
Okay.
The economic and political risks that reside within the Eurozone are absolutely tumultuous, if that's the right word to use.
Okay.
I think if you look at Italy, already in a recession, I think financially, the European financial system is insolvent. I think Italy's in a recession. Germany is arguably in a recession. They have declining industrial output. They had quarter 4 last year. They had negative GDP growth, followed by flat GDP growth quarter 1. I think that's very, very recessionary. We've got global car sales are declining, and Germany's car manufacturing market is the heart of their economy. And if we look at Deutsche Bank, I mean, I think it's a ticking time bomb. It's down 98%. It's got $40 trillion in derivatives exposure. I think it's going to zero at some point. It's the new Lehman Brothers. I think the European Central Bank continuing quantitative easing after a 9-month hiatus. The European Central Bank can't even handle 1 full year without QE. I think if we look at the Southern European countries like Spain,
or the Fed,
exactly.
Seems like, I mean, we did QT. I don't know for how long, if it was longer than a year, but that certainly didn't last a long time. Normalization here either.
No, it didn't. I think QT started in 2017, unless I'm mistaken, Dave.
Okay.
And I think, I mean, although it's not the portion that they were reducing the balance sheet, it's only a small portion of the post 2008 stimulus reduction. And in a way, it was could it be argued that it was reasonable and responsible, because if you print all that money, QE 1, 2, 3, etc. QT is trying to address that, but I think whenever the Fed, we're going to hear whether they're going to cut rates again today. And I think if the US economy can't handle a 0.25% basis cut, it's a big warning sign.
Yes, it really is. So with what you see coming, do you have any narratives to take advantage of, for example, recession in Europe? Do you think it's going to be good for the UK to disengage from Europe in a fairly big way? It is a divorce, whether it's amenable or not. Do you think that it's going to serve the UK? And since you have the pound up here and we're at this major support level, Do you think that we'll have a breakdown? I know a lot of people are talking about, you know, possibly even parity in cable. So tell us, that's a heck of a candle we have going. What's this, a weekly chart? Monthly? Okay, so we have a monthly reversal with what, about 12 days left in September. Are you bullish here?
I'm not quite sure, if I'm honest, Dale, because my followers will have seen I bought the bottom of 3 or 4 GBP pairs. I'm still holding a quarter of a position in GBP yen, which is up 750, 800.
Okay.
So I'm still holding that. I've got a position in the pound Aussie, and what other position have I got? I'm not sure. I've got 3 GBP positions, and it's worked out fantastically, but I'm not sure, because the big question is no deal priced in, and how much so is no deal priced in? Because the pound cable and pound pairs, it took an absolute battering recently. Let me just get up GBP NZD, because it's nearly at yearly highs. If we look at this chart.
Boy, you use a telescope, buddy.
What do you mean?
Well, monthly, you know, people that use 15-minute charts, I say they use a microscope, and you use a telescope, the grand view. You're like Galileo of FX.
Yeah, I'm not going to come on and talk about 1-minute charts, Dale.
Okay, yeah. Show me your tick chart and how rich you made your broker today.
I do love the 1-minute chart.
All right.
But I think the pound, everyone wrote off the pound, and because it took such a hammering, to me, that tells me that no deal is, or arguably so, to some extent, is 9% hit it took against NZD. And here we are, very close to yearly highs again. So if we look at David Bell, my good friend David Bell introduced me to something called the Balassa-Samuelson theory. And I think it holds a lot of weight, because it basically says a country's productivity is a massive, is massive in terms of trying to see potential gains or losses in an exchange currency, in say the pound, for example. And the pound is, the UK government economy, is very productive. If you look at industrial output, UK is solid, and the UK economic data is solid. And if we compare that to the Eurozone, figures came out the other day, the Eurozone is just getting battered. Germany's getting battered. And I think, to answer your question that you asked me before, I think completely detaching from the Eurozone, from the EU, is the best thing that we can do. If the EU do not want to give the UK a mutually beneficial deal, because they're trying to put the fear of God into other countries to say, if you leave the EU, this is what will happen. They're trying to kind of
fear-mongering.
Yeah, they're trying to hurt us, and I don't think that's right. So I think if they are willing to cut off their nose to spite their face, then they should go ahead, because a lot of Remainers now, if a Remainer has an opinion that they want to remain, that's fine. But if they cannot acknowledge any reason as to why someone would want to leave, then that is a problem for me, because I can understand the reasons for wanting to remain. You know, I think we don't know what the future holds. It's going to be a rocky 6 to 18 months. So it is a risk, and I completely appreciate that. But it's when, you know, the Liberal Democrat Party, Dale, in the UK.
Yeah.
Well, the leader is called Jo Swanson, right? Or she's the leader, I'm not sure. I haven't been in touch, but she's a big position in the party. She has publicly came out and said, if we get into power, we will scrap no deal, and we won't even hold another referendum. So they will take 17.4 million people voted to leave. It's been 3 years. The UK government, the media, everyone is trying to stop a no deal and not honour the referendum. And I think that
it's not a democracy then.
Yeah, exactly. I mean, if we voted to remain, I certainly would not have been happy about it. But I wouldn't be creating plots to try and overthrow the decision, because democracy is democracy. And I think if a country cannot hold itself to its referendum decision, then it's catastrophic. Sorry, I went off on a tangent there. In terms of the pound.
No, it's very interesting because you're there, you're on the ground, you know what's going on there. It's a great view from a citizen of the UK about what's going on. So it's all very appreciated, Cal. Go ahead. Keep ranting, buddy.
In terms of how to capitalize on it, I don't know, because whenever currency falls, that makes it more attractive to foreign investors, things like that. Sorry, I cancelled my trading view subscription the other day, so I'm getting all these pop-ups.
Okay. We don't see them. It's okay.
Okay, that's great. If we look at the FTSE, so the date of the referendum was 23rd or the 26th of June 2016, but the pound obviously took a hit. Look what happened. Look what happened to the FTSE. Look at the
It
month.
liked the weak currency.
Yeah, the month of the FTSE from its low point to its high, 15%, and then following that, it surged 38%. So I think if we worst case scenario, if we crash out of the EU and it's not priced in as much as I think it is, that'll be great for the FTSE. So I think,
so it could be a generational buying opportunity, is what you're thinking.
It could be, but in all honesty, Dale, I don't really know. I think gold has topped out. Let me think. Have I got Bitcoin? I'm not sure where the gold chart is. Let me just find it.
I think you had it up. I saw it a second ago.
Not gold, no.
There's gold.
That was Bitcoin.
Oh, Bitcoin. Okay. There's gold.
Move this around a little bit. I think gold has topped. Either has topped or it is topping, and I think that could be it now for gold. Because if we look at it, it's like a Bitcoin chart. If we look at it, so I think what I'm looking for going forward is I'm looking to sell strength in gold. I'm looking to potentially buy dips in GBP pairs.
Let me ask you this: sell strength in gold. Just looking for a correction in gold, maybe back to 1420, or are you like what's my buddy's name again? He's from Sweden. You know who I'm talking about. He's a deflationist.
Oh, Henrik.
Yeah, Henrik. Are you in Henrik? Are you in Henrik's camp that we're going to see it under 1,000 and this is just a bear market rally in gold and we're going to crash in gold?
I mean, I think it's hard to argue this is a bear market. Bear market rally in gold. I completely disagree with that. I mean, if we look at this, I mean, I'm not sure. His views are far too extreme for me. You know, I think he was wrong for 2 years in a row, and he couldn't even admit it to his followers.
Oh my gosh! You know what I tell people on Twitter to do, Cal? Maybe this is why you're a fan, because I'm wrong a lot. I don't know a lot, and so just cathartically, I tell everyone on Twitter, say this 10 times. I don't know, and I was wrong.
Yeah.
I don't know, and I was wrong. And when I was a younger guy, I would choke on those words. You know, I don't know. Then if you don't know, you're stupid. Exactly. And you were wrong. Oh man, I'm not going to work with you. But you know what? People with wisdom know when they don't know.
Exactly. If you don't know, Dale, you don't know. There's no shame in that. If I get I only try and share my best trades on Twitter. I've actually done very, very well over the last month, and that's why I'm not actively trading as much right now. I'm kind of sitting back and waiting because gold has been consolidating here for quite a while, so I don't know what's going to happen. But I think it's being held down by the 50 MA on the 4 hour.
Yeah.
I really don't know, Dan. I'm not gonna lie, but
I'd sell a rally at 1530 if we got one on the Fed being dovish. Let me ask you this, and this is a great day to ask this question. Big day for the Fed today. A red event, deep red, big stoplight. Do you carry positions into red events like the Fed, and will you carry positions into Brexit? or do you stand aside?
Nah, I unfortunately, like I used to, Dale. I'm not gonna lie, I used to. My favourite ones were whenever there's an Aussie or a Kiwi interest rate decision. It was always early in the morning over here.
Yeah.
And I've made some big bucks staying up late, and I've also lost a lot of money doing that. So I think nowadays there's no real need for me to. What I like to do is I like to see the reaction, see the strength of the move. Is it going to last? Is it going into high time frame resistance? Has that resistance been cleared? So, for example, if we see, I agree, a rally into somewhere up here in gold. For example, if we see if the Fed do cut rates and the dollar declines, gold will go up. So if it goes up here and it stays up here, then I'll look for some bullish price action, and then. So say it forms some kind of triangle or something like that, and it holds above the resistance, I'll look to buy the breakout. So I'll look to buy the breakout like that. I mean, I wouldn't risk too much, but yeah, I used to like trade news and things, but it's just too risky. I will definitely not be holding anything into Brexit. Absolutely not. But if we manage to leave, Dale, we were meant to leave the EU in March, but it got postponed. 3 years down the line, we still haven't left. If we do manage to leave, Boris Johnson is carrying the UK on his back. If he manages to actually get us out of the EU on the 31st of October, that'll be a winning trade for me. So,
you know what? You started the interview saying that you were a fan of mine. Let me tell you something, Cal. 20 minutes later or so, I'm a fan of yours now, my trading warrior brother, and I'm so impressed with your depth and grasp of the markets in such a short period of time. You deserve to be in the Guinness Book of World Records for. I know. I'm telling you. Look, I've talked to a lot of people, and I know when people know. And I'm amazed that you have this breadth of knowledge for such a short period of time, man. You have a great career ahead of you, in my opinion.
Thank you very much, Dale. That means a hell of a lot. I'm honored and thankful, my good friend.
Well, like it or not, you're my trading warrior brother now, and so I went to your Twitter account, and only link you had up there was Wikipedia. So do you have a service or a business model, or are you just trading for yourself and trying to help others on Twitter?
I just trade for myself, Dale. I think I'm not knowledgeable enough or good enough to sell a service yet, or whether or not I probably could if I wanted to set it up. I've had many ideas over the years, but I think I wouldn't. Depending on what I wanted to do, I think David Bell's macrodesiacs are a phenomenal model.
I'm familiar with David. I think I've seen him. I don't know if I probably follow him. But yeah, he seems to have been a big influence in your trading. Tell David if you'd like to come on Face to ping me. And so Twitter is the best place to follow Cal, and you're, in my opinion now, a great follow. So Cal's at CryptoCal_. Everyone that is hearing this live or watches the video later, add Cal. So anything you want to wrap it with?
I think Bitcoin is in a very tight range here. I don't know how people are trading this, if I'm honest. I'd look for a close above and retest of 11.5, or a close below and retest of 9.6.
Okay.
But yeah, no.
What happens under 9.6? 7,000?
Yeah, I think if we get a solid close on volume above, I think this could definitely be an echo bubble, Dale, if I'm honest.
Oh my gosh, echo! You even know echo bubbles? Okay. You know what? I had a great time talking to you today, Cal. And you know, I hope that pips rain down on you and everyone you're out there helping, and really appreciate you coming in today. I'm glad our paths crossed.
Fantastic, Dale. Thank you very much for having me on. I had a ball.
Okay, everyone, that's Crypto Cal, underscore after Cal. And good luck, everyone, today in the Fed. Remember, don't just count your pips, count your blessings. And we'll see everyone tomorrow when the dust settles. Good hunting, and see everyone later. Thanks again, Cal.
Cheers, Dale.
Cheers.